PayPal stock on Wednesday finally went up 4%, finally some move above that $60 mark. What actually happened? Well, the CFO sat down with an analyst from Wolf Research and her comments were very well received. More specifically touching on guidance and maybe hinting at a conservative guidance for them to meet and beat it. Now we're going to go over all of her comments, but for those that needed a small reminder of the current state of PayPal, this is basically it. Market cap just under $67 billion, forward PE 12.2 times, EV to EBITDA 8.9 times, price to sales 2.1 times, price to free cash flow that's in the last 12 months 15.9 times, and a PEG ratio of 1.3. You can find this on Coifin, link is down in the description. Now this is comparing it to its 1-year mean because I did want to show you the short-term valuation difference and the more longer term one. So 1-year mean, you can see that currently we are very, very close to that. But if we go and look at the 5-year mean, you can clearly see on a 5-year mean, PayPal much, much cheaper because this also includes the huge bump during the pandemic era. And so if we currently look at what the stock has been doing the last couple of days, the stock has been going up and up and up over the 20, the 50, and the major downtrend that started, well, quite a while back. Yes, it's true that back in January, the stock was above that downtrend, but didn't really manage to hold that. The 200-day moving average sits at $63.42. Yesterday tried to go over it, but got rejected. So this is definitely still something to keep an eye on. And maybe this time the stock might actually stay above the downtrend and start its way back up towards the next earnings report. Of course, for me right now, other than the stock reacting a bit positively here and there, some nice comments from management, nothing has changed. What I'd like to see is execution. Talk is cheap, execution is a bit harder. That's why I'm still waiting for the next earnings report, next earnings call, and even a quarter after that to actually see if the business is moving into the right direction. Currently, I have no plans on adding more to my position. Very happy with my allocation. Of course, do share your thoughts down in the comments below. If you enjoy these type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's go over the comments the CFO made. First up, lots of praise for Alex Chriss, the new CEO. So we got here one, Alex Chriss is awesome, and I thought that before I joined, it's even more underscored since joining, in terms of just understanding the kind of leader he is. The second one here, Alex is really impressive, he's strategic, he's a product guy, he's focused, he's an executor, really focuses on results, which he's that kind of guy you just want to work with. So lots of praise from the CFO, which is also, by the way, new to the team, lots of new members to management team, lots of praise for the CEO. Always great to hear. Now let's dive a little bit deeper with regards to PayPal, its business, and what's under the hood. So she talks here about all branded PSP, Venmo, and each of those is in a category by itself compared to the competitors in terms of the value it brings, the brand trust it generates, the kind of operational systems we have behind it, and I think really importantly, our global reach is not only reach, but it's deep. In some cases, we are already best in class. You're going to hear best in class quite a couple of times during that talk. We're not just commanding our price in the market the way we could be. Basically them saying they, again, get the right now to price it at a higher premium than before. We've heard this with Adyen, right? There is no race to the bottom for them. They know what they are giving. They know the value that they are giving their customers. And so they're not willing to price it as an extremely cheap product. Moving on here, talking about profitable growth. We've heard this from Alex. We've heard this a couple of times already. The main part, the main thing that's going to happen moving forward is driving profitable growth. So they've made significant investment, particularly in Braintree and some of their PSP businesses. They think about this, really push towards not just top line, but margins operating leverage, full stack, all teams working together across it. That's been a really important part, as well as the whole reorganization. Because again, management is basically completely fresh. More on that in just a second. The analyst asked a bit about their guidance. They had some questions on whether there's a lot of conservatism or some element of conservatism in your outlook, given some of the comments you made on the last call. To which she answers here by saying she's been here 4 months Alex has been here a few weeks longer than that, but most of the leadership team is new in position. And so when you think about guidance, we feel really strongly that we want to give you guidance that we are convinced around that we can meet or exceed. We need to get back into a rhythm of really meeting our commitments. Oh, finally, something good gets mentioned here. And that was our underpinning philosophy in terms of how we set that. We also candidly wanted to have some flexibility. Mentioned before, we need to make investment in the business, want to position this place for long-term durable growth. And we think 2024 is really an important year where we got new leaders coming in. More recently, yesterday, there's even a new addition coming from SoFi joining PayPal. Then she continues to talk about margins. Margins is a really interesting one, and part of what we talked about in the earnings call, we gave flat guidance to the analysts, explaining a bit more transaction margin growth. Yes, that's exactly that. But when you look at that, branded checkout is growing healthy. We grew 6% last year, and along with that, transaction margin is growing healthy. We continue to think that branded will grow. They're already seeing that as well. The PSP business as well, as they shift towards profitable growth. Honestly, the way they answer the questions and the way these transcripts are written, it's really horrible to read. Moving on to operating expenses, the guide there. So they gathered for low single-digit growth in OPEX, non-transaction expense growth. Maybe just help us understand the thought process and really where those investment dollars are going. So first of all, the team has done a really nice job in 2022 and 2023, really shifting the OPEX profile. Having said that, coming in, and maybe this was a pleasant opportunity, we had a lot more opportunity to drive OPEX transformation. So here it is. 1, merit increasing, cloud computing, some other things that naturally are going to grow year over year. A big piece of it is we took a couple of $100 million and put it back into engineering, product, and marketing. And then the other piece is last year we paid our bonuses in stock, and this year we are paying our bonuses in cash. So when you put all of that together, absent that, it would have been flat. With that, it's a couple of points. But when you pull back and just look at the OPEX line generally, it's really clear that we have more opportunity. Opportunity for AI, for automation, and when you look at where the clusters of headcounts are in the company, customer service, customer ops, how we do really optimize in different way, we have continued journey there. This is what I've been saying for quite a while, especially after what we've seen with regards to Klarna. AI could definitely help and automate a lot of processes with regards to customer support and even legal for PayPal. Then moving into PPCP, PayPal's complete payment, again, horrible name. We used to have a suite of solutions. PPCP is a fully integrated stack that is much easier for merchants to onboard, use, engage with us in a totally different way. We've been driving this over the last year. In the fourth quarter alone, 36% onboardings versus the prior year quarter. So really a significant ramp. As you look at where Alex spends his time and what his priorities are, PPCP growth and that continued embedding is a huge part of that. The analyst then asks about the opportunity when it comes to branded and unbranded volume at the SMB type of level. So the take rates there, which is obviously going to be better than enterprises on the brand side. That's a huge opportunity, right? To which she answers, huge opportunity. And of course, it's always great to have a CEO that has, well, a good track record with regards to small to medium-sized businesses. Continuing here with PSP unbranded. So she says here, as I mentioned before, we've had a lot of top line growth in our unbranded business. And really important growth, with really mega merchants, large merchants, as we think about profitable growth, as we think about pricing to value, not just pricing to win, to really shift our margin profile there. We've made significant investments in the Braintree platform. We have, again, a best-in-class product now. Here she's going to talk about Fastlane. Fastlane is something that is really an enhancer to the process, because what Fastlane does, it is allowing us to, if you go into guest checkout, to recognize about 70% of customers out there. Basically, this is how it works. Very, very perfectly well said. If you have the data on the consumer because they've shopped at another of the Braintree accepted sites or branded sites, you can therefore populate off that data on another merchant that you're accepting on, and therefore make the experience seamless. Perfect solution. Here's another mention of the best-in-class product. It is charging what we need to charge for and realizing that we've got a best-in-class product. Again, I expect to see margin expansion going forward. Last couple of things here with regards to capital allocation, buybacks. So for this year, we said we will deploy or do buybacks of at least $5 billion, which will be more than 100% of their free cash flow, which we think is a pretty healthy profile for now. And then we'll reassess as we get later in this year, which is around 8% already of the market cap. So quite nice. Then talking a bit more about credit. So right now we've seen higher delinquency trends in recent quarters and just how they are thinking about the balance sheet versus externalization of credit for the company. So first up, she says here, we don't really consider it to be primary. It's more about how does it integrate and how does it help us enhance conversion or other elements. We did have higher delinquencies in some books of business late in the year, and we expect loss rates, for example, to go up a bit in 2024, particularly on our consumer credit portfolio. But then when you look at the balance sheet side of it, we have been asset light in terms of our consumer partnership. Late in the year, we executed our KKR partnership with the Buy Now Pay Later book for Europe. That's a core part of their strategy, which is to be asset light, but continue to use credit as a way to enhance the rest of the business. So overall, to conclude, great comments, great little details that we've got there. That's awesome. But then again, we need to see continued execution. Of course, we're going to see that in the next quarter, maybe in the call as well. They can already maybe raise the guidance for the year, because I do still think that they have put the bar quite low at the start of the year. That's fine. 2024 is going to be a year of rebuilding and making sure that the whole business reaccelerate top and bottom, then exit the year as a much stronger company. And 2025 will be the year where you're going to see probably the huge progress this company has been making. Remember, it's all about the year-over-year comparisons. So that's about it for me right now. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.